We are just now getting into the beginning of the next earnings cycle. We have a lot more stocks declaring earnings this week. In fact, double what we had last week. We have 109 stocks declaring earnings this week. And we're watching about 41 stocks. I'm going to talk about a few of those 41. I have a new trade for you today. So welcome to Earnings Call. Let's get going. Hello, everybody. Welcome back to Earnings Call. My name is Jeffrey Beamer. I'm the Senior Investment Strategist over at ewotrader.com. We talk about a lot of stocks here, so don't forget to use the chapter feature that we have below the video. So if you want to jump to a particular stock that we talk about, you can jump right to it. But these are the stocks for this week that are really high on my list as far as big potential movers and quiet movers. Okay, so on the left-hand side of this sheet are all the stocks. And what do we consider big movers? Well, that's stocks that have double-digit targets, meaning the option market makers are pricing in double-digit moves, so 10% or greater. And then on the right-hand side are stocks that just aren't expected to move very much. Okay, we're talking single digits. They just don't move very much, and we utilize different strategies for both. Okay. So we buy premium for what we call breakout stocks, and we sell premium for the quiet stocks. All right. And I'll get into that a little bit more. But let's jump right into the list and let's talk about the quiet candidates first. Let me give you an example of one. Now, this is going to be Pfizer. Pfizer does not declare earnings this week, but this is just an example where I've highlighted the day and then the earnings day with the ellipse and the vertical line. And you can see that, this stock was trading in a $6 range for well over a year. $6, yes. And then through its earnings announcements, it would move less than 4% through the earnings cycle. So for these types of trades, we like selling premium. So that could mean iron condors, butterflies, maybe even. Okay. But mostly condors and iron condors is what I like to trade to give myself a little bit of room. All right. So let's take a look at our list for this week. And we're going to begin with Goldman Sachs. Okay. Now, unfortunately, as we go to the chart, I'm having a little data issue with Goldman today. So I don't have today's move in, but I can tell you what it is. Okay. So Goldman declared this morning, and the estimated move on this was less than 5%. And right now, Goldman is trading higher by 2.61%. All right, so it definitely met that target of a quiet move, just not moving very much. So off of that number that you see there, that 495.60, which was Friday's close, it's just 2% higher. No big deal. It's a nice quiet move today. But another one that also declared this morning is M&T Bank. Now, M&T is a little higher today. It sold off maybe a little bit, but it's been bouncing around. But again, it just didn't move very much. The estimated move here, and again, that's not our estimates. That's what the market is pricing in through the options market. That's what they're estimating the move to be. All right, and it was less than 5%. So a very quiet move there. And then another one, and you can see here, the banks really dominate the headlines this week. So Goldman, M&T Bank, and then we have FB Financial. Okay, here they will announce after market close today. Again, the estimated move is less than 5%. So this is a $40 stock. You could expect a move of $2 or less after market close. And again, even though this stock, as you can see here, has gone from about $54 down to $40 in the past since February, we're not worried about the overall trend. We look at just through the earnings announcements. Okay, so we take our trades right through the earnings announcements, and do not where we profit on these types of trades is from something called IV crush. Okay. So going into the earnings announcement, the option market makers raise the prices of the options. They get more expensive because of the anticipated move. And then after the announcement, we get this IV crush where the premium drops because now we know what the results are, and we can now move on to other things. Okay, so those three bank stocks had earnings, earnings all today. Okay, moving on. We have Albertsons coming tomorrow morning. Okay, so Albertsons, ACI is a symbol here. Boy, look at this nice little uptrend. The stock has been just a gentle uptrend for the stock. They will announce on Tuesday, April 15th, before market open. A lot of stocks are opening before market open this week, which is really interesting. The expected move here is less than 3%. All right, now, this is interesting. Last earnings cycle, you could see here, which was back in January, the estimated move was less than 2%. So they've increased it a little bit for some reason. But right now, we have estimated move less than 3% for Albertsons. Also declaring tomorrow will be Johnson and Johnson. Again, Tuesday, April 16th, before market open. Okay, the estimated move here is less than 5% for Johnson and Johnson. So yes, even though this stock has gone from a low of around 140 to a high of, look at that, hitting 170 within a month, literally a month and a half, and then it went from 170 down to almost 140 again, bouncing around. Believe it or not, we're not worried about that big move. We're focused just on that earnings announcement. And I would be selling premium here on Johnson and Johnson because we are expecting a small move, less than 5% for Johnson and Johnson. And finally, we close out with another financial tomorrow. Okay. And again, these are all quiet stocks. Bank of America, they'll have earnings on Thursday, 4/16. Sorry about that, not 1/16. Let me just edit that date. And I believe that, let me just confirm that for you, because I clearly see, that's when you know a trader is doing these things, because we can't spell, and we're always doing those sort of things. So we always have to re-verify. So they will have earnings. Let's correct this here. Tuesday, and let's see here. Tuesday, and that will be 4/15. Okay, before market open. Definitely got that part right. Yep, before market open. And the expected move is less than 5%. So apologies for that, but we got that corrected. So earnings on Tuesday, April 15th, before market open, expected move less than 5%. Okay, now moving on, two more for quiet stocks. Yeah, a lot of quiet stocks to really dominate the headlines. So not only financials, but quiet stocks that dominate our list this week. Abbott Labs, Abbott Labs, a quiet stock. Yes, they will announce on Wednesday, April 16th, before market open. The expected move here is less than 6%. Okay, this is a $100 stock. Definitely like these that are priced in the hundreds and doing like iron condors or condors on these, where we get a net credit or a wide break even. The stock can move around a little bit, but as long as we set that break even beyond the estimated move, that's the trick, is how we profit on these stocks. So Abbott Labs will announce on Wednesday, April 16th, before market open, expected move less than 6%. And closing out will be another financial. Okay, American Express will close this out on Thursday, April 17th, before market open. The expected move here is less than 7% for American Express. Also, a pretty decent stock to trade, although spreads on this one, I know from experience, have been a little wide, but you could definitely do a nice iron condor on this. Just make your break evens wider than the estimated move, and you're good to go. All right, so that is our quiet stocks for this week. So if you find this information helpful, please like and subscribe so that we can reach other traders, and especially option traders, or those that like to trade earnings. Okay, that's what I, with our publications, Delta Neutral Income, which are the stocks that I just kind of covered, all those from Goldman to Albertsons, Johnson and Johnson, Bank of America. In fact, we just did a trade on Bank of America for my Delta Neutral Income customers, our subscribers there. Okay. And so if you like that, please support us in that manner, and I would appreciate it. So let's get on now to our breakout stocks. And these are the ones that are a lot more exciting from that standpoint. Okay. The list is relatively short this week. We do have a few. We have that I'll get to in a moment, but let me give you an example of a breakout stock. Now, this is Akamai. They do not have earnings this week, but this is just an example. And you can see here the difference between this and what I showed as an example earlier, Pfizer, how this stock gaps around through earnings. Okay. Really pops. It's one of my favorite stocks to trade around earnings, and it really moves. It moves double digits around earnings, and we use a different strategy for these. We use straddles and strangles. This would be in our delta neutral breakout portfolio. So let's take a look at our breakout stocks for this week. We start off the list with JB Hunt and United Airlines, which we'll declare tomorrow. We didn't have any breakout stocks for today. And you'll notice on the list that, and I should have addressed this earlier, but you'll notice there Friday we have a market closed indication. That is Good Friday. So markets will be closed this Friday, the 18th, in honor of the Easter Sunday and the Easter weekend. That is Good Friday. And so markets will be closed. But let's get into these breakout stocks. Let's jump to the charts real quick and begin with JB Hunt here, right as it pulls up here. Okay, so JB Hunt will announce on Tuesday, April 15th, after market close. The expected move here is greater than 10%. In fact, it was right at 10%. Now, JB Hunt has quieted down recently, but I think the market makers, with a lot of the tariff news and how that could impact all sorts of industries, including trucking, this could be a double-digit mover going into earnings. And I might definitely keep an eye on that. So JB Hunt, Tuesday, April 15th, after market close, expected move greater than 10%. And then as we move through the week, we have Travelers. They announce Wednesday, April 16th, before market open, another before market open one. All right. Travelers is expected to move greater than 10%. All right. Believe it or not. So Travelers is usually a decent mover through earnings, moving double digits, right at it, right at 10%, maybe a little bit more, maybe a little bit less, but it moves there. So how I would price that out is, if I could get a straddle or strangle on for, 6 or 7% of the price of the stock. Okay. So stock's at 250, 10% of that, and then less, 6% of that. So, I would be, that's how I would play that. If I was getting a price right at 10% on the straddle or strangle, then I wouldn't do the trade, because that's moving the estimated move, and we're looking to exceed that. We would need it to move more than that to profit. All right, so that's what to watch out for there on a stock like Travelers. It's right at that 10% move. Do I sell premium or do I buy premium? It's right there on that edge. All right. Now, another stock that we will take a look at and we will be watching this week is in the home builder sector. This is DR Horton. They announced Thursday, April 17th, before market open. All right. The estimated move here is greater than 10%. All right. So expecting a little bit of volatility through the earnings cycle. And again, interest rates, all sorts of stuff. There's always a story with the home builders. Whether it's an increase in lumber prices or an increase in interest rates, there's always a story. So Thursday, April 17th, before market open, the estimated move here is greater than 10%. So you would want to get your straddle or strangle in there right at 10% or less, and that's 10% of the stock price. Okay. All right. Finally, we're going to close out the week with Netflix. All eyes will be on Netflix as they have earnings on Thursday, April 17th, after market close, and the expected move here is greater than 10%. Now, Netflix is one that is a little harder to trade because this is a $900 stock, and your options are going to be expensive. Last time I glanced at this, I think the straddle or strangle was around $7,000. All right, and that would be for only larger accounts, say over $250,000 or more. I would say, well, if you get down to 100,000, that would be 7% of a portfolio. So, I wouldn't, or actually, no, I would need, you would need about $250,000. So, to keep your percentage of portfolio at a minimum to trade a straddle or strangle on this, because the estimated move here is greater than 10%. And is Netflix going to increase their customer base? Are they going to lose customers? That's always in question. Okay, always in question. So that causes the stock to really gap around. You can see here. Oops, I kind of missed the earnings announcement. This is the earnings announcement prior, and you can see my estimate here. Back here, it was greater than 11%, and you can see the nice gap up that it had. So as you can see, Netflix is a mover through the earnings cycle, and we would want to pay attention to that. The only problem with it for smaller accounts, smaller trading accounts, this is not one that you would want to trade. Just way too expensive, okay, for that sort of thing. All right. So if you stuck with us this long, then we're going to get into the fun stuff, because we have a couple of trades to take a look at here. And we have a couple of open positions. Now, normally I like to kind of keep our trades within 1 week duration, but one of the trades that we did a couple of weeks ago, it didn't have weekly options. Okay. It only had standardized options, and the trade would have expired this Thursday, not Friday, because it's market's closed, but that would have been paychecks. Okay. So this is when we put the trade on. We were doing an iron condor, and you could see how the break evens, which are the horizontal light blue lines, the stock hasn't traded outside of those break evens in the data that we have here. So back in November 11th is when that data feed started here. And then when we put the trade on, look at all that time. So we expected then, with 3 weeks left in the trade, that we could sell high premium, and we could then make a profit. So last Friday, okay, we would have taken this trade off. All right. So it was a very nice move for our trade when it tested the upper break even, but did not exceed it. And then the stock started to fall. So last Friday, we would have taken this trade off for about $112. We could have closed it out for $4 debit, because our credit was, I believe, $1.16. That would have left $1.12 in profit. And again, that is per iron condor. Okay, per iron condor. So since we base this on a hypothetical $10,000 account, that would have been a 1.12% return on portfolio, and it took a little longer than we like. It took about 2 weeks for that, almost definitely 2 full weeks for us to experience that trade. And if you by chance still have this trade on, I know implied volatility ticked up a little bit today. It took some of those profits away, but time is on our side. Stock has not moved outside of the break evens, and you will be able to exit that today or tomorrow for a majority of the profits. And then Thursday, the trade expires. So if you want to hold on to it and let it expire worthless, if the stock does allow us to do that, you have that option as well. All right. So Lynn, let's get to the trade that we did last week. All right. That was on Cal-Maine Foods. All right. So same kind of thing here. We are selling premium going into earnings. We don't expect, there could be a little volatility, but we don't expect these big double-digit gap moves that we often see with the breakout stocks. So we did another iron condor on Cal-Maine Foods, and like the name, like the stock symbol implies, we were looking for a calm reaction through the earnings announcement. So how did we do in the trade? Well, right now we are 7 days in. We have a $61 profit. The stock did rally up, test the upper break even of our trade, but is trading a little bit lower today. So we have a profit of $61 right now. We'll stick with it. We have theta decay, we have time decay on our side, and we're just letting that tick on. This trade does expire this Thursday. I would watch this, but right now, no action necessary because the stock is definitely within our break evens. All right. But for this week, we are going to change it up. Okay. We've been doing iron condors and just picking off these stocks one after another, one after another, one after another. But we're getting back out to where we do have some quality breakout candidates, and I have one for you today. So if you like those breakout trades and those stocks that gap and they start running, well, I've got one for you today. So let's take a look at our trade for this week. This is on DR Horton, DHI, and this is a straddle. All right. Now, the straddle is going to cost you about $900. All right. The strangle, if you go about $3 out of the money, okay, when this snapshot was taken, we were right at 120. So if you were to do the 123 calls and the 117 puts for a strangle, your break evens would be a little wider than this, but to get the narrowest break even, the straddle is our strategy of choice. And that would cost you around $900. Okay. So about a $15,000 trading account could handle that with ease. But if you have a smaller account, like a $10,000 trading account, you would want to strangle this and go out of the money a little bit. No more than $5 out of the money. I priced it all the way I did the 125 calls and the 115 puts. And again, a little wider than what the straddle is, but still not unreasonable. All right. So, but our strategy for our purposes here will be the straddle on DR Horton. So we're expecting double-digit moves from this stock, and we will see how we did next week. So be sure to tune back in each and every Monday for us right here at Earnings Call. And for your attendance, I do have a free gift for you. If you want to know how I trade these breakout stocks, well, I have a guide for you. It's available at ewotrader.com/straddle. And you can take a look at how we trade these violent whipsaw stocks around earnings. And they are a lot of fun to trade. And that is our gift to you. So everyone have a great trading week. Happy Easter. And I will be back with you next Monday for Earnings Call. Take care.